1-10. Elaine's Inflatables earns service revenue by providing party plane service and inflatable playscapes. Elaine's Inflatables is organized as a corporation. During the past month, Elaine's Inflatables had the following transactions. And we are to indicate the effects of the business transactions on the accounting equation for Elaine's Inflatables. Transaction A is answered as a guide. So A was received contributions of $10,000 in exchange for common stock. So what happened is we had an increase to assets, the cash side, and we had an increase to equity in the form of common stock. Okay? So this would be plus an asset, and the asset is cash, and then it would be plus equity, and it's common stock. All right, purchased equipment for $5,000 on account. So when they say on account, that means that you haven't paid for it yet. And in this case, I bought something and didn't pay for it, so that gives rise to a liability. I owe somebody some money still. All right, equipment is an asset. All right, so we're gonna have plus asset, which is gonna be equipment. And then we're also gonna have plus on the liability side, and it's an account payable. All right, on C, I paid $400 for supplies. All right, so office supplies are an asset. I paid $400 for them. That's cash, which is also an asset. So I'm gonna have plus asset, and that's gonna be the office supplies. And then I'm gonna have minus asset for the cash. So one thing I want you to notice about this one is everything took place on the asset side. There was no effect on the liability and equity side. If you remember, we've got this assets equals liability plus equity, and everything has to equal out around that equal sign. Well, in this case, my assets increased and decreased by the same amount, so I had 0 equals 0 as my net effect. All right, D, earned and received $2,500 cash for service revenue. All right, so I got cash. All right, so remember cash is an asset, so that's going up. All right, and then revenue is an element of equity. It increases equity, so I'm gonna have it increase to equity, and it's gonna be service revenue. All right, then I paid $400 for wages to employees. All right, so I paid cash out, so I'm gonna have minus an asset, and that's cash. All right, this is an expense when I pay my wages, and expenses decrease equity. So I'm gonna have a minus to equity, and I'm gonna have wage expense as the account. Cash dividends of $1,000 were paid to stockholders. So once again, I've got cash going out the door, so I'm gonna have minus an asset, and it's cash. And then dividends come out of equity, so I'm gonna have minus equity, and it's dividends as the account. I earned $1,000 for services provided. Customer has not yet paid. Okay, so generally, you know, if I provide a service for cash, they're gonna give me cash, and that's an asset. In this case, they owe me some money. So I have the right to receive it. That is also an asset, and it's account receivable. All right, and then it's because I earned revenue, so that's plus equity, and that would be revenue or service revenue. All right, then I paid $1,000 for rent. Okay, so cash is going out the door, so I'm gonna have minus on the asset side, and it's gonna come out of cash. And then I'm gonna have minus on the equity side, and it's going to be rent expense. All right, and then in H, I received a bill for $250 for utilities. The monthly bill has not yet been paid. I'm gonna do this one down here. Okay, so I received a bill for utilities. I haven't paid it yet. So since I haven't paid it, I still owe it. So that's going to be plus a liability. And that would be accounts payable. And it's utilities expense, which is going to come out of equity. And notice this one is kind of like this one up here that we did, where everything took place on the right hand side. My liabilities went up, my equity went down by the same amount. So I have a 0 around the equal sign.